Hello, so what do you do if the market's tumbling? Do you have a strategy at all, or do you just sit there and sell all your stocks, which is probably the worst thing you can do? Stay tuned. I'm going to go ahead and show you a strategy or a mix of stocks that you can actually purchase. They're going to be closed-end funds. I'm going to show you why they're good to buy in this case as kind of a buffer, and hopefully you'll learn something from this, but definitely post some comments when you hear about this, and let's get into it. All right, so if everyone remembers the end of 2018 when the market was kind of crashing there, it was going down quite a bit. A lot of people were in ETFs, and ETFs, some of those like SPY, for example, you can look that one up. That basically was a pretty popular ETF. A lot of people were in that, so that carries about a 1.8, 1.7% dividend. A lot of people at that time, though, when it dropped 12 or 15, 20%, a lot of those people were selling that stock because it was dropping. And on top of it, the dividends obviously weren't paying enough for their income. Some people live off the income on dividends. So they had to sell that and try to move to something else, and they lost a lot of money. My strategy is basically a little bit different. We're going to talk about closed-end funds, and I'm going to give you some examples here. These are basically meant to be very stable during market downturns, and they carry a pretty good dividend that doesn't really fluctuate. So for instance, the ones I'm going to show you carry like that 6 to 7% per year dividend, and it doesn't fluctuate, meaning like even when the market basically tanks, the dividend snaps right back, and you can get that income during that time. And you just basically leave the stock. If the stock goes down, just don't worry about it. Collect the dividends for your income, and then watch it come back, in a few months later. The first one's going to be basically the Nuveen Dow 30 Dynamic Overwrite Fund, and the symbol for this is going to be DIAX. This is a fund, and there's a couple other ones like SPXX is one of them. It's another fund by Nuveen. But I'm going to show you how these react during a downturn and what basically happens. Basically what it does is the dividends stay right where they are in those high 6 to 7%. So if you're actually getting that dividend coming in each month or each quarter, that stays the same. Stocks don't actually move that much either because it's going to be a little bit of difference in how they manage them. Closed-end funds for the most part though don't get nearly as big as the open-ended or the ETFs. So for example, SPY, the one we talked about earlier, it's basically going to have around 285 billion with a B market cap, or basically that's how much money is invested in that pool. Some of these other ones like SPXX, which are these closed-end funds, are only going to be in the $250 to $300 million range. So it's going to be substantially, quite a bit lower as far as, what they're actually, the size of the funds. And what that gives it is it gives it a lot of, the managers a lot of ability to actually make changes quickly. So they can actually make changes during these downturns to kind of offset some of the losses and also keep the dividends high. So let me go ahead and show you how that works. All right, so the first one I wanted to show you was the DIAX fund here. It's Nuveen Dow Dynamic Overwrite Fund. And the reason for these funds, again, are they basically help you during a downturn because they don't fluctuate that much and they carry a really high dividend even during downturns. And that actually helps your income coming in. So if you take a look at this stock, this is back in about 2014. This is obviously the big drop in 2018. But if you can look at this chart really quickly, it went from about 18 down to about 15. So it wasn't a huge drop there, and it came right back really quickly the next, within a month or so. But the main difference here is it's going to carry this really high dividend down here. So during times where you need that income coming in and you're a dividend player, this will continue to give you really high dividends. This usually almost never fluctuates, even during a big downturn, and the stocks are set up that way. So let me go ahead and show you over here. This is the page for the actual stock here, and basically it says the fund is designed to offer regular distributions through a strategy that seeks attractive total return with less volatility than the Dow Jones. It's got a broad market opportunity, so the equity portfolio provides the opportunity to participate in the Dow Jones because it kind of mimics or tries to follow the Dow Jones. That's the first thing it does, and that's not that different than most stocks. Here's basically where it's a little bit different. It's reduced volatility. It sells rights, call options on a portion of the equity portfolio, reducing the fund's return volatility and downside risk, but also reducing some of the capital appreciation potential. So what they do is they basically, they use these call options to basically limit the volatility of the stock. At the same time, you're not going to maybe get the biggest swings upwards, but that 6 to 7 to 8% dividend is always going to be coming in. And it's really, since this is a smaller stock, it doesn't have the billions of dollars in market cap. These managers can do a really good job at, really kind of massaging the stock to where it needs to be to have the returns continue to come in. And then basically at the end it says tax advantage distributions offers the potential for regular distributions distributions from qualified dividend income, long-term capital gains, and return of capital. But basically, again, go ahead and take a look at this stock. The main reason for this is it really keeps you on a stable path. It doesn't have these huge fluctuations, but on top of it, it always maintains that really high dividend. So when all your other stocks are going down and you have a low dividend stocks, and they actually, some of your dividend stocks lose some of the dividends that they return, this one will usually stay right there and keep you the high returns going. This is SPXX. It's the Nuveen S&P 500 Dynamic Override Fund. So it's just like the other one, the other one was Dow Jones. This one's basically the S&P 500. Same thing. It's going to just basically mimic that, but they basically manage it in a way that doesn't move too much. So here's 14 something. Over here is about 15 something, 16 something. So it's going to move just slightly. It's not going to be these huge volatility of stocks like you see in an individual stock. But the dividend is going to be in that 6 to 7 to 8% down here. This is 6.34. And even during these downturns, like when it happened in the end of 2018, these dividends stay very, very stagnant. They don't move that much. So you're always getting that income coming in when you actually need it, and you just basically wait out the market, stocks come back, but basically the dividend keeps coming in. Alrighty, so you can see that the purpose of this is basically just to kind of offset some of your other stocks. So if there's a market downturn or a recession, you can basically hold on to these stocks. These stocks usually don't fluctuate that much, and they also hold those dividends really high. So if you have a lot of different stocks that are in the 1 or 2% dividend range, maybe 1%, and the income's not coming in, and you're living off that income, these other stocks that I'm talking about here, these closed-end funds, a lot of times they'll carry that 6, 7, 8% dividend, and it'll stay pretty stagnant. So you basically get that income the entire time. Even if the stock takes a drop, the dividends aren't affected that much. And the great news about that is you can kind of wait out, have the stock come back up, and you continue to get those dividends, and you get that cash coming in. So it's kind of a good way to kind of offset some stuff, and you can definitely use this method, add it to your portfolio and take a look at some of these stocks. Again, I don't recommend any of these stocks necessarily. I always tell people, do your own research on any stock that you purchase and things like that. But obviously, these are just examples only, and you want to definitely look at which is the best one for you. But I just want to let people know these are available. These are closed-end funds, and there's some that are very specifically tailored for this, and these are the ones I showed you. So that's basically what this video is all about. All right, thanks for watching. If anyone can please subscribe, it would really help me out. I'm just trying to get my subscriber level up so I can continue to make good videos. I make videos on technology and on investing and some travel ones as well. So I'll talk to you guys in a week. I usually make about 2 a week, so maybe I'll see you sooner. Talk to you soon.